Hey, what's up guys? My name's Sumner Healey, and in this video, I'm going to teach you how to flip land with little to no money. I know it sounds like a really clickbaity title, and I definitely don't recommend getting into land with little to no money, but if I had to, I'm going to show you something that's really simple that anyone can do, okay? You don't really need any tools, much experience. You just need internet connection and a phone. Now, what we teach inside of our coaching program, Leah, has nothing to do with what we're going to cover here. This is a good way to get your foot in the door to hopefully make enough money to join something like Leah, which is really going to show you how to build a reliable, repeatable business in land that prints. Absolutely prints. This is not a strategy that's going to teach you to print, to be honest, but it's a good way to get your foot in the door. And the reason this came up is because it's actually something that we've done in our business. I've done it a handful of times. And I was actually talking to a gentleman in one of our webinars a couple months ago, and I want to say that he's done either 7 or 10 deals through this strategy. And I'm pretty sure he's made 6 figures. Now, you do need a way to fund these deals, either personal capital fund these deals. I'm talking about no operational, no marketing expenses. That's the real thing. You most likely need a way to fund these deals. There's deal funders out there that will fund them with the good deals. You don't have to bring money to the table, but if you have money, maybe that's a way to do it. If you're really slick, you can actually bird dog and wholesale some of these deals. As crazy as that sounds, it is possible, okay? So let me share with you. I actually want to just talk about a deal that we did not too long ago. And what this is going to require us to do is to leverage on market data, okay, which everyone has access to. We're going to leverage the MLS and platforms like the MLS that will show us what's actively listed out there. Now, to do something like this in houses just doesn't really work. Like the houses is just far too saturated. There's too much demand out there. Land's a little different. There's a lot more supply than there is demand in the land space. And so you'll see there's markets out there that have a lot of inventory that just hasn't sold, right? And it's because land's an illiquid asset. And so what can happen is sometimes sellers get antsy or they have life events happen. The property's been up for 6 months or a year or 2 months. They say, I just need to get this thing sold. Alternatively, this is kind of a separate root issue, is that in a lot of cases, there's just like an arbitrage in land where people don't understand the value. So sometimes it's just people put up listings that are seriously mispriced. And so what this strategy requires us to do is to select markets that we want to participate in and watch them and be a sniper and wait for inventory to come up that either is mispriced, wait for inventory that's really stale, it's been up for a long time that you make offers on. But sometimes neither of those really apply. Sometimes there's listings that come up that are priced accurately and they're new and the seller just wants to sell them at an extreme discount. Now, in a lot of cases, this strategy is going to require us to make offers that are at a discount, right? Just like what we do in Leah with blind offers, where we go out to owners directly and we make offers at discounts. We're going to do the same thing here, but we're going to leverage on market inventory. We're not going to require any marketing channel like direct mail. Now, just like direct mail or texting or cold calling, there's a statistical element to it. It is a numbers game, as in maybe I get 1 deal per 1,000 letters, hypothetically. It's more than that for us, but it's a hypothetical. But it also doesn't mean if I send out 1,000 letters, I'm going to get a deal my first time, right? Like you need to build up a data set that's big enough. And so to do this, again, you've got to be a hawk that's watching the market, and you've got to commit to some KPIs. And namely, those KPIs are how many offers are you making and how frequently are you following up with offers that you have made. So I might suggest a strategy where I'm making 10 to 20 offers a day for on-market listings. And then I have some kind of Excel sheet or some kind of CRM, some way to track what I've made an offer on. And then every 14 or 30 days, I'm just going to follow back up with them. If that deal hasn't sold, I'll just follow up. And the interesting thing that happens here is that even though realtors have a fiduciary responsibility to get the best price for their client, realtors are humans too. Sometimes they want to get paid. Deal's been up for a while. They want some cash in their pocket. So ironically, sometimes the realtor will go to bat for you, even when you're making a heavily discounted offer. Now, I'm not poo-pooing realtors. I'm just saying I've seen it happen. I've had it happen. And one of the first deals that I ever did that was kind of following this strategy, but it's a complete accident, was a deal that was listed at about $120,000. It's in Colorado, it's in a subdivision. Now, I didn't know about this strategy, so I made an offer through direct mail. Property happened to be listed. I had no idea. Realtor calls me up, says, hey, we think we want to take your offer. I don't remember the exact number, but my offer was definitely less than 20 grand. I think my offer was like 12 to maybe 15,000 at the highest. So pretty much 10% what the property was listed for. That seems like a deal that should never go through, right? Like, why would they ever say yes? Well, seller had life things happening. Weren't getting any offers on market because their price was so high. Here comes a guy that's offering the easy button. Now we ended up selling that deal for whatever, 38,000 or 45,000. So a pretty good deal, still way less than what they had it listed for. But that speaks to the lack of information on pricing. Now, sometimes realtors listing is way too low. Sometimes they list them way too high, and so they get no traction. And so you come along 6 months or 12 months or whatever, months down the line, and they're so fed up, they've got no traction. And so they want to let it go. So sometimes actually a really high price can work in your favor. So we're not just looking for ultra low prices here. Now, what got me thinking is I could have reached that seller lead without spending $1 on marketing. So why was I not looking on market? So started looking on market. Now, one thing I'm going to put on as a caveat is the on-market game is definitely best suited to some kind of value add strategy. That's my theory. It doesn't have to be, but I think the math pencils better, as in 40-acre property. Let's say it's worth 100K as is. And let's say it's listed at 105,000, so slightly above retail. Yeah, we could make an offer at 50, but maybe they're not that receptive to it. But what we realize is we can actually break this up plat exempt to 10 acres and above. So we could create 4 10-acre lots. And we pencil the math on this. We recognize, holy Toledo, this is worth $140,000 broken up into 4 lots. So now we get to come in and make an offer at whatever, $65,000, $70,000, $75,000. Seller's a lot more open to that offer. They say yes. Cool, not a ton of margin as a standard flip, but a damn good deal is a subdivide. So what you'll learn is if you have a way to add value, doesn't just have to be subdividing. You can obviously pay a premium for these deals and your acceptance rate is going to be a lot higher. Now, I don't want to mislead you. You can still make offers that are very, very low and some people will accept. Your acceptance rate is going to be lower though. And in the same vein, if a deal is listed at 100 and it's not selling and you're buying it at 50 and you think it's going to sell at 100, well, what's your edge? Do you have buyers that they don't have? Do you have more time so you can wait to sell the property? Is the property poorly positioned? Do you know how to market it? Is there something that they don't understand about the property that you think would actually allow it to sell over 100? So you do have to think about that, right? And so in theory, actually offering lower than 50% is not a bad idea if it's been up for a long time and if it's not selling, but there are other root causes. So it doesn't just mean that the property is not worth the price it's listed at. And also maybe you're just more patient. There's always a place in this business for very patient capital. So anyways, an example on the more value add side is we found a deal in Texas, of course, fit that 10-acre example I provided. It's a 36-acre property. I think it was listed in the high 200s. We got it in the low 200s. We created an owner finance situation. So we put $40,000 down on the deal. We broke it up into 3 12-acre lots. And we're selling each 12-acre for about $120,000. In fact, we actually just sold one this week. So all in all, we'll probably sell for about $360,000. Got it at 220. It's not the biggest spread ever, but we only have 40 grand into the deal. So as you get more advanced, there's strategies that you can start to layer on here, whether it's creativity with the financing, whether it's unlocking value through subdividing or easement creation or fill in the blank. So anyways, keep an open mind. Let's go look at some deals and see if we can find anything. Okay, one important thing I'm going to share with you before we get started here is we created a free Chrome extension that you guys are going to see me use in this video. It's landinsights.co/Chrome. Free to download, put in information. It'll share it with you. So you get price per acre shown on all the listings. This works like land.com, Redfin, all the different listing sites. What's really cool about it too is that when you pull up any of these sites, what typically happens is it's on, homes and it's on actively listed. Well, you can set this up so when you pop up to the website, instantly the land filter is set on. And if you want, you can have it so it instantly pulls up sold, which if you're a land investor, you should only be looking at land pretty much all the time. There are some edge cases, but for the most part, it like really adds a minute or two every time we pull up any of these websites, which sounds minor, but when you're looking at hundreds of deals a day or dozens at least, it gets really slow every time you populate this. Pretty slick, saves us a couple hours a day for myself and my team, and it shows us the price per acre. Okay, so we're looking in Hill County right now. This is in Texas. We've actually done a deal here. There's a lot of inventory, 644 listings. This is a market that's definitely slowed down a lot, but I'm using it as an example because there's going to be a lot of very, very old, stale inventory. So if you go sort by newest, you can just go scroll down and go and look at newest to oldest if you want. And I think there's 2 edges that I like to think about. There's one, the old listings, the oldest listings, right? Those listings that have been up for years in some cases, depending on the market. And so like you could see how that seller would be motivated. The alternative edge I think about are the newest listings. Now, interestingly enough, there's a real edge to being early to making an offer on a deal, and you never know the seller's situation. So those are the 2 edges I like to look at when I'm first starting looking at an on-market listing. And then after a while, you'll start kind of blowing through everything, right? One of the cool things that you can do as well is you can create an account here on Redfin and then set alerts for specific markets that you're looking in. And if you're going to execute on the strategy, this is one of the things that I recommend is go and set your search parameters, pick a few markets or a couple of dozen markets, however you want to go about it. And then just keep on refreshing and tracking those. And it probably means that you're looking at them every day or at least having your notifications set. So when new listings come online, you're right on the jump. Now, one of the things that you'll learn is a lot of these listings are, of course, really poorly listed. So take this listing, for example, might not be the best example ever, but this is a listing where it's got 2 photos taken on some poor realtor's iPhone, a pretty brief description here. And so in a lot of cases, sometimes the listings are just the tip of the iceberg. There's a lot that you can't learn from these listings. And so what I do recommend is actually calling the realtor. Now, they're not always going to have all the answers, but in some cases you can get the parcel number for them and probe further because there's a lot of deals out there where there's just misinformation or there's information missing from the listing. There's actually a lot of value to be had by probing further. So again, you can see there's all these little sub niches, sub strategies to this main strategy of finding on-market inventory. And I'll give you an example. We had a gentleman inside of our community who shared a win last Friday, and he found this deal. It wasn't on market, but it's a similar story. He found this deal. The seller said, yeah, the soil shot on this, it'll never perk. You can't get a septic system on there. He said, you know what? I think it will. And he probed a little bit further. He got a perk test done. Turns out soil's fine, totally fine. So here's a deal where he's unlocked value. He's found out information, essentially an informational arbitrage that no one else knows. So this ended up being a monster 6-figure profit deal just because he took the time to probe a little bit further and not taking everything at face value, whether it's from a seller, whether it's from a realtor, whether it's from a listing. It pays to probe further. Now, of course, there's only so much time in the day. So can you probe further on all of these listings? Probably not. You know, here's a listing that doesn't really excite me. It's a little under half an acre. It looks like it's probably in a subdivision. This is the kind of inventory I'm really that excited about. You see someone created a subdivision. So there's a lot of subdivided lots. These aren't anything that anyone's ever going to let go at a discount, in my opinion. There's obviously no value add angle for something like that. So it just doesn't really get me that excited. Now, I have no idea about this property, but I look at this and I say, okay, there actually could be something maybe kind of sort of here. Who knows? I really don't know. Prior mobile home park, so some utilities in place, including multiple septic sites and one building. Great property for RV park mobile homes to build on. Ask your realtor for details. So interesting, right? It's a small lot. Maybe there's some development potential here. Maybe it requires a rezoning. Maybe there's value that you can unlock from rezoning it. Maybe you buy this property and you actually make the improvements yourself. I mean, this might not be a flip candidate. Maybe this is a deal that you negotiate and you bring to an RV park developer or a mobile home person and they partner and you get some equity in the deal. Now, of course, you can't just bring on market listings to them, but there could be a thread that's worth unraveling here. And again, very limited details. It does really not tell us much. It's been up for 4 days, $149,000. I have no idea if it's a good deal or not. Maybe you could do a lot split on this. I mean, there's a whole bunch of things that get my wheels turning on this. And again, maybe this is a deal that you lock up, you negotiate at a great price, and maybe you go and assign it to someone. And that might seem weird, assigning an on-market deal. I think it's pretty uncommon. But hypothetically, if you were able to lock this deal up at just, say, $75,000, and you brought it to someone that could see, hey, by buying this at 100, still a great deal for me, and you got it under contract, I don't see anything wrong with that, to be honest. In fact, we've had people bird dog deals for us. They found on market. We'll give them like an equity split in the deal. I don't like people just sending me on-market deals with no work put into them. I think that's kind of lazy. It doesn't really provide any value to me. But if you've gone and worked a deal and you've broken it down, whether you're the one that takes down the deal or not, there's probably a way to get paid on the deal if it's truly a deal. So here's a 77-acre property. I don't know, again, any of the details on this. I see it's got a road running along what looks like the length over here. I'm already thinking, hey, maybe this could have some subdivided potential. Let's see about the lot lines here. So you got road frontage here, road frontage there. Definitely subdividable for sure, just based off of the shape, without knowing anything else. It's kind of interesting. I can tell they're already asking way too much, $13,000 an acre. That's probably pretty close to what a 10 acre would trade for, which is most likely what someone will be subdividing this to. But again, this has been up for 7 days. It's definitely a deal that I would think about going and making an offer on just to see. Also, water is not a problem out here. That's a big deal, both for agriculture, but also water's a problem in a county like Hill County. That's why it's important to start to understand the markets that you're working in, because you'll get some insider information that will give you a real arbitrage over other people. You might recognize, whoa, having water in a 77-acre property is actually a really big deal. Boom, you see that maybe this price is a little more warranted than what most other people are saying. So there's a real edge to starting to understand markets. But yeah, guys, that was just a quick little 5-minute demo. I mean, you guys do this all day long, and there are thousands, maybe even tens of thousands deals out there that are qualified as real opportunities that are sitting on a market that you just need to go and find and make an offer on. So go get your butt out there. No excuses. There's a lot of opportunity. Now, I don't recommend this as the model forever. It's lumpy, slightly unreliable. It's very manual. It could be a part of your business, but we prefer direct response marketing because we're a little more in control. We're not so much held at the hostage of realtors or what's on market. And so we can kind of grow beyond what's actively listed and go directly to the owners. But it's a great place to start, build up some experience, build up some liquidity, go deploy that, get educated, and then go build a real business. Or ultimately just test if you even like this business model, right? So many people come in, they know nothing about land, and they're pretending like they're going to do this forever. It's like, just go and do a deal. Just figure out if you actually like this or not. That's the real defining factor of who goes the furthest. If you like this, you'll stick in the game for a long time and it'll pay dividends in the long run. So, all right, guys, hope you enjoyed this video. Take care of yourself. Bye-bye.